Tushar, thanks very much for your time.
My pleasure.
So oil's got up about 46 odd % from the $26 low earlier in the year. What now?
This particular month, we expect it to be a little south of 40s. It has breached 40 on a couple of occasions and then come off. There are a few things which are driving this. Uh, some of the production is out. You have a pipeline leak in Nigeria, a pipeline rupture in Kurdistan, and Libyan supply is reduced. So this is causing a short-term increase in balances, which basically means that tighter balances overall. And this has led to a short-term rise. But given these fundamentals, price still remains weak, although not at the $30 levels anymore. So we expect it to be south of 40 and north of 35.
But that is in the very near term, right? You said this month.
That
But
is
say over the
absolutely.
next 3 months?
By second half of this year, crude oil is going to be relatively tight in the global oil markets because of increased demand and reduced supply from US. So we are expecting it to go up to the $50 levels by Q4 of this year. So a continuous northward rise in second half of this year, very tight market.
What about the Iranian oil, which was expected to counter any tightness from other sources?
The Iranian oil is coming, definitely, and we are expecting between 5 and 600,000 barrels a day in the next few months. But this is countered by the reduction in US supplies, which is expected to be around 450,000 barrels a day. At the same time, there are some unexpected outages and in places such as Kurdistan and Libya. Now, these are all serving to tighten the market. And demand growth has been slightly higher than earlier. So overall demand growth for 2016 is now expected to be 1.4 million barrels a day. Previously, we expected more like 1.2, but demand growth has been very strong because of low prices. So a combination of all these factors would result in a tight second half of this year.
And by the end of the year, you think around 50?
Around 50 by the end of the year.
50 or 60?
50. 60
Okay.
is a few
No,
years away, but we are getting there. But this year, we expect it to end at 50.
So, we got the Chinese data yesterday, right? I mean, exports have slumped some 25 odd %. I mean, actually, throughout this rebound, not just in oil, but other base industrial commodities, copper, aluminum, zinc, nickel, etc., everything, data points have been flashing red around the world. I mean, be it industrial production, be it trade data for large economies, everything. So, where is the increased consumption coming from, really?
The areas which are directly impacted by low oil prices and where the end consumer directly sees the low prices. For example, transportation. So gasoline has been really strong. Jet has been really strong. Economic growth has meant naphtha has been strong. So we are seeing the increased demand in the lighter barrel. This exports and the trade data indirectly start impacting gas oil a lot more. So we are seeing weak demand growth in gas oil. But transportation, where end users see much more direct impact, that leads the first increase in because of low oil prices. So transport demand is growing, and that's where the big increase is coming from. We expect that to continue going forward.
You said you now export overall crude oil demand per day to be 1.3 million barrels, as against your earlier expectation about 1.2, is it?
Now is 1.4.
1.4.
Versus earlier of 1.2. So there's a demand is ticking up, and predominantly it is coming from the lighter end of the barrel. So even China, for example, which is showing red marks in trade data, for example, is seeing double-digit demand growth for gasoline and strong demand growth for jet. Same is the case with countries such as Korea, which has traditionally shown 1 to 2% growth. it's showing very strong growth for gasoline and jet. India is showing double-digit growth. So all around, we are seeing globally very strong demand growth for gasoline.
Tushar, thank you for your time. Good speaking with you. Appreciate you joining in with that perspective.